You were at the event. Some people have suggested it lacked energy and enthusiasm. What was your take?
I couldn't disagree more. I mean, to some extent, I think, this is one where right now the bears are winning this battle in terms of Tesla, as we've shown this litany of bad news. But in our opinion, from an excitement in terms of the actual vehicle, Model Y, the specs, as well as even test driving the car, I thought it was massive enthusiasm. I think right now it's a glass half empty view of Tesla till they navigate this period of uncertainty, and we think they get through it. And in our opinion, Model Y is what could be a game changer for Tesla.
Dan, the event was invite only, I think I'm right in saying. Were there as many bears sitting alongside you, do you think, as bulls?
Yeah, look, I mean, I didn't get the chance to talk to anyone, in terms of, I was focused on, really trying to test drive and really understand the specs on the car. But no doubt right now, I mean, Tesla is what I view as just an emotional bear and bull story right here. And I think right now, I view it as a 12-round battle. And if you look at it, right here, the Bears have won this. But in terms of what I saw last night, I view that as a linchpin to our bull thesis as we look out over the next 12 to 18 months.
Well, we have a bear to talk about this alongside you, Craig Irwin. Were you there last night? And if so, and if not, what were your impressions of the whole thing?
No, I was not. This is something that was completely, what they described was anticipated. They packed those events with fanboys, enthusiasts. And they don't really want anyone that's not an enthusiast. So, I'm not surprised that I was not invited because, I do a lot of primary research and I'm not necessarily focused on what Tesla is saying. I balance what I hear from the market.
Craig, what is your biggest concern for the stock at the moment?
The biggest issue for Tesla is battery prices. Their battery prices are materially higher than the whisper number they're giving. $240 a kilowatt hour is what we have from the METI data out of Japan. That's hard economic data. Their whisper number, they whisper in dark quarters, 100 to 150. It's just, there's no way they're at that level. Porsche, Volkswagen, they're going to be buying batteries at $250 a kilowatt hour. Tesla has no advantage on battery prices. And the reality is the cars that they're selling, the Model 3 and now the Model Y are just too expensive. They're far too expensive. So even with the price cut, you're really just getting a smaller battery. In order for the demand to be sort of where the bulls want it to be, 800,000 unit opportunity for the Model 3 plus the Y, realistically, you've got to have a much lower price, and they can't get there without getting costs out of the battery.
Dan, how do you address those concerns about demand at this price point? And really also, where are the goalposts right now in terms of what the company has to meet to satisfy your bull case on volumes in the next couple of quarters?
Yeah, look, there's no doubt 1Q is an air pocket. I mean, obviously the EV tax credit coming off in the U.S., even though, we were in Europe a few weeks ago, and we do believe Europe, in terms of Model 3 deliveries, especially in the Norwegian countries, look strong. I think they need to get through this 1Q. You have to have profitability going into that kind of 2Q, 3Q. Is a capital raise, is that a risk out there? But it really comes down to demand on the mid-range. Can you see that 35 to 42K price points? Is that going to stimulate demand? We believe it does. Second half in the U.S., I believe it comes back. And I believe as we go into 2020, this is a much different story. That's why I totally hear what your other guest is talking about. But I view this as a forest of the trees. In my opinion, next 3 to 4 years, this company has a transformational growth opportunity. And this is more of an air pocket rather than the start of an apocalyptic trend like the bears would like to think.
Craig, the similarities some people say between the Model 3 and the Model Y, is that an advantage or a disadvantage?
The 75% parts commonality is a good thing. It should help them as far as supply chain, but the reality is that they still have a lot of money to spend to complete the final debugging and initiate manufacturing and complete the tooling to be able to make this car in volume. So, it's just like, the S and the X originally, the 3 and the Y, it's their sister cars. And this is the way they've learned to do things, learned to design things. I wouldn't say it's a material advantage. I think it's, just sensible design.